Good afternoon, everyone, and welcome to the Daily Volatility Box Report for October 18th, 2019. We are TOSindicators.com, home of the Volatility Box. For today's trading, we had quite a few trades that set up. The interesting part is the Nasdaq was the one today that we had our stop out in, where we were forced to switch on over to the conservative volatility box. But typically, it's been the Dow for us. So that was a little interesting to see. In fact, the Dow gave us both our T1 and our T2. Same with the S&P. The S&P was in fact the strongest. And then the Russell, we had two trades in. The first one, I believe, was a winner, and then our second one was a fade right after we hit our second target, which was a loser. And so we ended up scratching there basically for a positive 75. And then we had one trade in the crude oil futures, which gave us our targets. And so that was a plus 600 for both of our contracts. And so in total today, we had a total of 7 trades. For a total winning percentage of 71.4%, with that Nasdaq trade really being the loser, and the reason why we ended the day not up too much and the week negative. And so our P&L for the week ends up being negative 577, and that loser in the Nasdaq has a good chunk to do with it. While unfortunate to see, it's a manageable loss the entire week as a whole. We were able to make back some of it today, and so that was nice to see. We'll head into next week and hopefully look to make back this loss and then get back to our streak of winning weeks like we're used to seeing. Okay, and on the calendar for Monday, we don't really see any key events here, so we'll be looking at Sunday night's volatility. You may want to refresh this just in case something's updated before Monday's actual trading. And then otherwise, apart from that, we'll be looking at the aggressive volatility box and that first hour test to tell us which volatility box we should be using for the day. And then for earnings plays, we had 2 plays that set up based off of what we talked about in yesterday's video. One was in KSU, and then one was in STT. And our play in KSU worked exactly like we thought it would. It was a gap and go in a bullish scenario with a beat. And so all 3 of these conditions had been met. And then we surpassed, I think, even our average move. We were on the upper tier in terms of percentile moves in KSU. So that was a really nice win. And then we also had a gap up in STT. And with the gap up and a miss, which is what happened in STT, we were looking for that gap to get filled. It was a small gap, so the risk wasn't really all that big. But that gap wasn't filled, and we ended up going the opposite direction. So this was, in fact, a loser, the STT trade. Now, coming up on Monday, we have a few trades setting up. So we have one in CDNS where we're looking only for a gap and go in the bullish scenario, only if we have a beat. The catch here is you want to look at the expected moves. And so for these gap and goes, at least using our expected moves, we want to have a gap that's above our expected move. Because if we don't, we've seen that a smaller gap, you may have as little as, say, a 25-cent move on a rather expensive stock, where your risk reward doesn't really make sense when your average move is, let's say, $1.34. Right? This is a big difference in trying to play the same ticker. You would almost be asking to get stopped out if you had a stop of, say, just 25 cents. But really, there's been an instance where it gave you only that much. So studying the historical patterns of this and understanding the expected move is really useful. Going next down the line, we also have SAP, where we're looking for a gap and go in the bullish direction. And here we're looking for a move between $1.15 from the open to $1.81 on average. All right, next we have AMTT, which is TD Ameritrade. We're looking for 2 scenarios. One is a gap and go, and this is in the bearish scenario if we miss on earnings. And if that happens, then we're looking for a move between 34 cents to 84 cents. Again, a smaller move, but you can see that the average to the lowest differential is a lot less compared to, say, what CDNS's differential is. And so that's what we're really looking at. Also, AMTD is a cheaper stock, and so I believe it's a cheaper stock, and so that's something to keep in mind. The second scenario in AMTD is a gap down fill, and so if we gap down, but we end up beating on earnings, then we're looking to fill that gap. And so really, in both cases, we're looking for a gap down. It's just a question of if we're going to fill that gap or if we're going to continue down in the bear scenario, for which we're looking on the overall earnings direction for guidance to. And then finally, we have a smaller company, Zion. Here we're looking for a gap down. And we're looking for that gap to be filled if we have an earnings beat. And so these are the plays that we're looking for on Monday. Now let's go on to the volatility box trades for today. We'll start in chronological order. And so the first trade that triggered was the Nasdaq. So the Nasdaq was the first one where we had price fall down. And I was looking at Forest Factory to see if we had any news events that came up. Nothing showed up. And so this just seemed like a very perfect bounce. And so this is where we got filled on our entry on the Nasdaq. Our stop was outside of the volatility box where we had given it 25 points of room. And that's what we were looking for. Now, we had some follow through, but this didn't really give us our target that we were looking for, which was 25 points, which was a little bit further up here, before price ended up reversing and then stopping us out. And so the Nasdaq was the first ticker in which we knew that we were facing greater than expected volatility, or greater than usual volatility rather, and we had to switch on over from the aggressive volatility box to our conservative volatility box. And so on the Nasdaq after that loser, we were on the conservative volatility box looking for trades. Now, the other indices did not give us similar signals, right? And so now if we look at the aggressive volatility box here, this is where the Nasdaq had an entry. We didn't have any sort of entry on the S&P. In fact, we weren't even close to our entry line. And so the S&P told us that we were respecting the aggressive volatility box models. And so our entry on the S&P came as price fell into our aggressive volatility box entry lines right here. We had an almost perfect entry on the day. Our stop was outside of the volatility box where we had given it 6 points of room. Our first target was 6 points. Our second target was 8 points, which was also hit. And then price continued to go up. And so if you had, say, a third contract or a runner that you had scaled up, or if you, say, had a trailing stop here, you were the beneficiary of a really nice move up. And that was our entry in the S&P, where you were able to capture almost a picture-perfect low of the day, which was really nice to see. And then one thing that might be interesting is if we layer on the supply-demand edge indicator, we see that we had a lot of plots, but a lot of false signals. And so false signal, false signal, false signal, false signal. You may count this as a real signal considering that you had sort of a move up. But then again, false signal, false signal, false signal. And so a lot of times people have emailed us asking, how do you read out the noise, or how do you filter out the noise of these false signals? And I get this is sort of the clearest answer that I think we can show. And for volatility box members, you saw this set up today. If you had the supply demand edge plotting, is the only real signal that gave you the almost perfect entry was the entry after we had crossed our entry lines. And here, for example, if we had crossed the entry lines, that would have also been a signal that to me would have held more weight than, say, a signal without any sort of edge context in play. But here you see as soon as you had signal and then edge context in play, gave you the almost perfect entry for that reversal for the rest of the day in the markets. Now, if we move on to the Dow, so the same thing in the Dow. We didn't have an entry when the Nasdaq had set up an entry. So the Dow, again, we were on the aggressive volatility box. We had our entry as price gave us an entry to go long as we fell into the volatility box entry lines right there. We did fall a little bit deeper, but again, you can see what I mean by false signals being filtered out as you have edge context. And that helps you sort of read out the noise and know which signals you should take and pay attention to versus which ones you can ignore. Anyway, so our entry was right here at the entry line. Our stop was outside of the volatility box where we gave it 50 points of room. Our first target was the 50 points. And then since we had fallen deeper down into the volatility box clouds on the Dow, that second target wasn't too far away at 57 points. So both were hit for a T1 and a T2, but our T2 was only 7 points away, so not really all that crazier of a T2. Now let's move on to the Russell. Okay, and on the Russell, using the aggressive volatility box, our first entry came in the same fashion as we had an opportunity to get long as price fell into our volatility box entry lines. Our stop was outside of the volatility box where we had given it 3.5 points of room. Our first target was the same 3.5 points, and then our second target was at the target line, which was 5 points away. So again, a pretty close T2. Both targets were hit. As we ended up hitting our T2, this is where our entry to go short was triggered in. And this was that loser trade that we had talked about, where we had an opportunity to go short. Again, the same 3.5 point stop and 3.5 point target, except in this case, price didn't reverse like we thought it would, but we instead ended up continuing higher. and this is where we were stopped out on that second trade in the Russell. And so that first trade giving us that extra T1 is really what helped us end the day positive in the Russell, a meager profit of $75, but a profit nonetheless. And then finally, we have crude. And so on crude, we had our opportunity to go long right here as price fell into our volatility box entry line. Our stop was outside of the volatility box. We were given it 30 cents of room. And then if I turn extended hours back on, we can see that price ended up drifting higher into the close. And on a Friday close, we ended up moving this T2 line back down to the T1, especially as we were entering that final hour of the market. We did end up hitting that T2, so if you had left things unchanged, then you still ended up hitting your T2. Otherwise, you were able to get out for basically what we got out at the close, which was really just two T1s of 30 cents, which is right around here. Okay, so these are the earnings once again that we're looking for on Monday, either before market hours, but if you'd like to do some weekend research, then go ahead and do that. You can also use a smarter earnings tool to prepare for earnings later on in the week if you'd like, especially with that new expected move thing that we've made. For those of you that are a little bit more tech savvy, you can go ahead and try and build some scans. Keep in mind, however, as soon as you use the scan functionality, you can only go back a maximum of 1 year using the daily aggregation period in the scan tab. And so that is a bit of a restriction in the Thinkorswim scan tab, which is why the scans aren't really all that useful. But it does help you if, say, you might be looking for a 4 out of 4 scenario, something of that sort, something that happens 100% or maybe even 75% of the time, then that's something that you might be interested in looking at. All right, so to conclude today, we had a nice trading day today in itself, apart from the Nasdaq, where we had 7 trades, winning percentage of 71.4%, and a total P&L of positive 910. That helped us recover some of our losses from earlier on in the week. We still did end the week negative, so a negative 577.50. And if we had that Nasdaq trade be a positive trade or some earlier signal to have been on the conservative model, then we would have been able to end the week up on a more positive note. But that's all right. We'll continue trading next week following the same rules, the same plan. We hope you have a wonderful weekend, and we'll see you next week. Take care.